The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. European equities line up a day in the green after the Dow posts a record close in Thursday's session. Bond yields pull back after a rollercoaster week. Oil prices creep higher as Iran and the US remain at loggerheads over the Strait of Hormuz and the fate of Tehran's enriched uranium. US Secretary of State Marco Rubio lashes out at reported discussions over a permanent toll system.
No one in the world is in favor of a tolling system. It can't happen. It would be unacceptable. It would make a diplomatic deal unfeasible if they were to continue to pursue that. So it's a threat to the world if they were to try to do that. And it's completely illegal, by the way.
Estée Lauder surges in extended trade after merger talks with Puig fall apart, ending discussions that would have seen the creation of a $40 billion beauty group. The White House unexpectedly postpones an executive order on AI, with President Trump expressing concern the move could hamper America's lead over China.
A live event on the ground in Sweden this morning. The Secretary General of NATO, Mark Rutte, is speaking. Let's listen in.
Of course, that the money is really coming in. Many allies committing more and more, accelerating the path to the 5% spending commitment in The Hague. And this literally means tens, over the years, hundreds of billions of extra defense spending. Secondly, the money is great, but then we need to spend it. And to spend it, of course, is on the men and women in uniform, but also making sure that they have what they need to deter and defend. And that is the defense industrial output. And there's an intense debate going on with the defense industry, with the financial sector, to make sure that also they do what is needed to ramp up their defense production, not increasing prices, but producing more. And good news is coming in. We make progress, but still a lot needs to be done. And Ankara will also very much focus on this issue. And then thirdly, and last night we had Andriy Sybiha here, the Ukrainian foreign minister, of course, is how can we keep Ukraine as strong as possible in the fight. They are holding the front line, and I'm really impressed how they fiercely opposed the Russian attack since 2022, the full-scale invasion since 2022. But still, we have to make sure that they have what they need to maintain in the fight. And that is also about money, and making sure that that money and the support for Ukraine is as evenly distributed over NATO allies as possible. And I think we can do more here, so that will also be one of the themes we will discuss. Having said this, we will meet later today at the presser, but if you have a few questions now, I can take 2 or 3 and then we'll see each other later. Yes, please.
Thank you. What do you make of the announcement overnight from President Trump that he will be sending 5,000 more troops to Poland, reversing a decline? And what does this mean for the smaller deployments in the Baltic states, as you understand it?
Well, of course, I welcome the announcement. Our military commanders are working through all the details, but of course I welcome it. But let's be clear. The trajectory we are on, which is a stronger Europe and a stronger NATO, making sure we will, over time, step by step, be less reliant on one ally only, as we have been for so long, which is the United States. So that also for them, they have the possibility and the option to pivot more towards other priorities, which are also in our interest, will continue. But of course, I very much welcome the announcement yesterday.
One question. How confused are you about this contradicting messaging of the US? And what can you do to ensure the predictability for allies regarding the US presence?
Well, you have seen over the years always that there are decisions about deployments and troop levels, etc. But there is, when you zoom out, you clearly see the trajectory. And the trajectory is that European allies are spending more. I've mentioned yesterday again the German example, but I could mention the Dutch example, the Polish example, so many examples in Europe. Sweden, where we are today, already reaching the 5%, including the 3.5 core defense spending by 2030, 5 years ahead of schedule. And this is necessary not only to equalize what we are spending with the United States, but also to make sure that we have what we need to deter and defend against our adversaries, including our long-term threat, which is Russia. And the US will play a key role in Europe when it comes to the nuclear, but also when it comes to the conventional. But what you will be seeing over the coming time is a step-by-step process where the Europeans step up more, which is really important. The Americans acknowledge this. And within that process, you will always have, of course, decisions and announcements which are part of the longer-term trajectory.
Does it matter for NATO whether this decision of Trump is a military strategic one or purely a political one to punish one country and to gain another?
Hey, listen. NATO is a political military alliance. So that's the big difference with China or Russia, where one person in the end takes all the decisions. We are a democratic alliance and a military alliance. And that means that decisions will always be informed by military and political considerations. That's how it works.
How can you guarantee that the focus stays on Ukraine?
Basically, it is happening already. But I'm seeing, for example, the United States, the flow of US crucial...
Marco Rubio there, the Secretary General of NATO, speaking in Sweden, actually at Helsingborg. This is a strategically important area to NATO. It is the narrowest stretch of the Strait, so vessels effectively passing through there, a shadow fleet passing through there almost on a daily basis. But defence capabilities, something that Marco Rubio just bringing up there, they need to ramp up some of that production. Discussions around Ukraine, how to ensure there's enough support so that it wins the war, but also talking about some of the contradictory statements that have been proposed by Trump in recent days, where he was talking about cancelling 4,000 troops to Poland, only to say that the Americans would be sending an additional 5,000. So lots of questions they're quizzing the NATO Secretary General about the predictability of partnerships, and he was talking about the strength of the NATO alliance. But let's get some thoughts with David Stubbs, who is Chief Investment Strategist, Alpha Core Wealth Advisory. Thank you very much for joining us and listening into that press conference too. Yeah. What did you make away of the takeaway messages for investors from that conversation?
Sure, I think three things. Firstly, that Mark Rutte has done a tremendous job as a leader of NATO. I think his relationships across the Atlantic are superb, and he's managing to be effective at a very difficult time. Secondly, as you laid out, the US is actually still engaged in NATO. The rhetoric may be kind of punchy at times, but this is a country that still understands that it can't turn tail rapidly, that the Europeans need some time to ramp up. And thirdly, for investors, biggest one is obviously the European defence spending. It is coming. It's going to be a mega trend over the next 10 to 15 years. And as Mark Rutte said, the future is a stronger Europe inside a stronger NATO.
Of note is that defence stocks have not been performing particularly well, and that's not just in Europe, it's in the United States. Despite a hot conflict in the Middle East, with effective duration, we don't know when it's going to end. You're still seeing that these stocks are coming off the boil. And given the conversations we just heard from Mark Rutte, that we need to ramp up capabilities, does this mean this is a buying opportunity?
I think in the medium term it probably is. One of the most difficult things about thematic investing is being enthusiastic over a long-term trend and having to deal with short-term disappointments or reversions after a period of strength. We've seen defence stocks get significant support in recent years because of what we see going on with the world. There's some other things going on with defence stocks as well. For example, questions over rare earth metal access, for example, which may be key to you actually supplying the things that you're supposed to supply to your customers. But over the medium term, especially for those in Europe or supplying Europe, that move systematically higher in defence spending over the next couple of decades, I think absolutely has got legs.
Fascinating. I know NVIDIA was talking about the rare earth access yesterday too. David, thank you very much. We'll come back to you on some of the more broader investment themes in a moment, but let's just take a look at markets.
Yes, and there's a strong performance to be found on the US markets on Wall Street in the Thursday session. One of the most crucial numbers on the various digits on the screen there, the top top right of your screen, 50,285. The Dow breaching that 50,000 psychologically important mark, 50,000 level once again, and that figure representing a fresh record high, and the Dow closing 0.5% higher on the day, the outperformer among the three benchmarks, but the S&P 500 and the Nasdaq also advancing in the Thursday session. The S&P actually on pace for its 8th positive week in a row. This despite the volatility we've seen in bond yields. Let's have a look at the Treasuries because they have been fairly volatile this week, more volatile than you'd see in normal times. What are normal times? It's easy to have forgotten that, isn't it? But you can see they have eased from the highs that they hit earlier this week across the entire curve. The 30-year tends to be reflective of political sensitivities. The 10-year, obviously, significant for mortgages and loans and credit cards. The 2-year, much more sensitive to interest rate, Fed interest rate expectations. And part of the moves coming after we saw the minutes from the Federal Reserve's latest meeting showed more officials than had previously been thought favoured removing the easing bias language from the Fed's outlook. So perhaps fueling anticipation that the Fed may even consider raising rates if they feel the inflationary effects of the Iran war and the energy price spike are feeding through into the wider economy and risk being sustained. So that's the US. Let's have a look at what's happening in Asia. And in the current trading session, a positive view to be found across the main benchmarks there, particularly the Nikkei 225 advancing 2.6% there. The other benchmarks also in the green as well. And when trading gets underway this Friday in Europe, here's what's being called, and a positive start to the day being anticipated on the main benchmarks after a somewhat mixed day. The Stoxx 600 closing Thursday above the flat line, but 3 of the 4 benchmarks closing lower. It was only the FTSE 100 that ended the day in positive territory, although, just to put that in context, week to date, all of the main benchmarks looking to close the week on pace higher than where they began. Karen.
Let's pick up on some of that action with David Stubbs, Chief Investment Strategist, Alpha Core Wealth Advisory, staying with us. David, it was a fascinating day yesterday. You saw a leadership change away from the S&P 500 and the NASDAQ towards the Dow. Typically when that happens, it's a move away from technology. But it wasn't yesterday because it was quantum stocks that are helping power the Dow. So the market looking on to the next theme that they saw in technology, investment by the Trump administration, about 9 different quantum companies. Why is the focus still on semis for you and on energy infrastructure when for some investors it might be space and quantum now?
Well, I don't think it's either or. It can be both. Yeah, I mean, I think you need a lot of semiconductors if you're going to do things like space tech. Quantum, the issue has been for a while. What are the pure plays really going to actually crack this thing? Do you want to invest, for example, through a larger name, the classic one? Not recommending it, but say IBM, they're huge, quantum capex. And no one knows who's going to create the secret sauce here to actually bring quantum into a commercial reality. So I think that's a little bit challenging there. Overall, though, we still think that the AI capex theme into the data centers is still not fully matured. You're still going to have a very significant runway here. Yes, we've seen some extraordinary moves across different parts of the tech space. We're sticking with the core semiconductor names as part of our broader portfolio, both in public markets and in private.
Leadership change in the semis, though, is something the market is watching very closely. The NVIDIA report fell somewhat flat despite incredible numbers. It was devil in the detail around competitive forces coming into play, all the others that are building out semis as well. And even the way they re-geared the earnings around the data center earnings, that not everybody's building the data center in the same way. Some are doing it cheaper, it seems. So how do we think about leadership in the semiconductors and whether NVIDIA is still going to be the leader in future?
You can't be the largest company in the world and not suffer from the law of large numbers, right? It's very hard for a company that size to grow. You see also a discussion over future dividend payments. It's clearly maturing as a stock. Doesn't mean it's not a good place to invest, but it may be a different type of stock. You've seen, again, the Trump administration back other names with significant investment. There's that in play. As well, there's different parts of the supply chain, for example, making the lithography machines, which obviously make the fabs. You've got some very significant memory and chip names in the EM space as well that I think rightly have got some focus there as well. So, NVIDIA may not be as a powerful a leader and as exciting a story as it was a couple of years ago, but it still has a wide moat. It still has tremendous innovation. It still is locked in to many capex plans for large companies. So I think you just see maturation of that company. Yeah.
David, so much of the build out and the investment is leverage, is fueled by borrowing, and the costs of that jumped this week. Even if the Fed and central banks don't raise their rates, if the government cost of borrowing goes up, so does it for everybody else. Yeah. What's your take on the volatility we've seen? I saw you nodding as I was running through the bond yields there. I said, we are not in normal times. What are normal times?
Exactly. What are normal times? I think a couple of things. understand what is driving the government bond yield. It's actually a movement higher in real yields. That's usually a sign of a positive growth outlook and the need for the economy to have higher policy rates to keep it in balance. I've noticed the 30-year tip yield now is over 2.8. That's very high. At the same time, your point is not wrong that obviously if the government curve shifts up, other funding curves tend to shift up. Mortgages being a great example, but corporate spreads are getting very, very tight now. So the large companies haven't seen too much of an increase. What they have done, of course, is massively ramp their borrowing to fuel the AI build out, and you've seen a big increase in market capitalization, a big increase in earnings, and actually a kind of collapse in free cash flow. Now, if this investment works out, that'll be justified. We've seen a little bit of this movie before in Amazon, right? For many years, didn't make a lot of money, was investing hugely. The question is, and what markets have been doing in the last 12 months is starting to differentiate. Who do they believe is actually going to get return on investment? Who do they believe has got leadership? We see that both in the public markets and, of course, in the private. You've been talking about the massive IPO, extraordinary IPO calendar we're going to have. Everyone knows the three big names that are going to go public, and how perception over those names, particularly the two AI names, has changed dramatically in the last 6 months. So there's differentiation here. That doesn't mean that's not what you see at the peak of a mania. Peak of a mania is buy anything to do with it. You're actually seeing some differentiation. I think that's healthy.
I just wonder, the thing that seems to have surfaced again this week is warnings about the energy supply crunch and actually the prospect of physical shortages. And although the economy and the markets, equity markets, feel at the moment they're like a car powering along the highway of growth and performance, it's almost like the fuel gauge on that car is broken. It's showing that there's actually more fuel than there actually is. And with depleted inventories, stocks are much lower, the drawdown's been significant. And actually, unless Hormuz opens, we're going to get to a point where, industry, businesses, consumers, it's not about can you afford to buy it at the inflated price, can you get hold of the stuff? I mean, how much of a headwind is that at the moment?
I think for certain parts of the global economy, it's going to be a very significant headwind. We're sitting in one of those countries now. UK imports a lot of its jet fuel, for example. Europe-wide doesn't have a lot of hydrocarbons domestically. Obviously, the disruption in the Middle East, and then parts of Asia, as well. Now, the United States is 70% of MSCI world. The United States has the big tech companies. The United States is a net oil exporter. And one of the strange things about this is the US is somewhat, almost totally actually, insulated from the consequences of its own actions, right? Yes, gas prices are rising a little bit, right? I personally don't think that is going to be a major concern for the Fed. They'll probably look through it unless it's replicated and boosts wages in the labor market. But what you're talking about, the drawdown in stocks and supplies, especially in refined products, right, over and above and more aggressively than the crude products, absolutely is the kind of elephant in the room for the international economy. A couple of months down the line, if we are still in July and August, you're going to see significant disruption there. And there are parts of the global economy which are also already starting to crack a little bit. You saw the slowdown in the PMIs across Europe that came out yesterday, the latest one, but that's been going on the last couple of months in tune with the war. You see, I think, a range of indications where from surveys and other commentary of people delaying purchases, delaying investment decisions, both households and businesses, because of the uncertainty over some political turmoil and I think over the energy shock as well.
The interesting part is that it's all systems go for these IPOs because everybody assumes that the Strait of Hormuz, Iran, is going to be cleared up at some point and that it's not going to bring the adverse scenario that macroeconomists have been looking at. Assuming it does go ahead, and I want to pick up on your points around the differentiation, because I was saying that yesterday, it struck me that you had potentially an operating profit coming from Anthropic versus the deep operating loss that we're seeing at SpaceX, a very different operations is what you're witnessing.
Sure.
That said, what sort of waves are we going to see on the market? Because there's a fast-track process to bring these to the major boards, so passive investors have to effectively put into these listings at some point much earlier than they typically would. Do you think the nature of this landscape is going to have any difference for investors? Will we even notice when these land?
Oh, I think we'll notice when they land, yes. I think we'll be talking about it a lot.
But if you're holding other stocks, you're passively holding the Nasdaq, for instance. Will you even notice?
Well, I think that in the run up to this, the passives are going to have to sell something to buy these new stocks. You're right. I believe the process from listing to being in the Nasdaq 100 is now only 15 days.
Exactly. Let's call it a fortnight. Yeah.
Yes, exactly. So that is extremely quick. I think this is going to reshape markets. Now, this is one of the reasons why a lot of our liquid equity is passive. We don't particularly want to play this game of trying to game who's going to be in the index, who's not. We want to capture the broad growth that comes from a passive allocation. We want to take active share risk and active management risk in private markets and alternatives at the core of our portfolio. We like to stay quite passive and low cost in some of our liquids. And I think we are seeing here the maturation of private markets and the merging into public markets. We know that companies are staying private longer. Much larger private companies than we've ever seen before. We see this development of almost a new sub-asset class of late-stage pre-IPO venture. You call it growth venture, some people do now. And then we're now just going to see massive changes to huge benchmarks in a short space of time because of these unprecedented IPOs. So passive investors, I think, will be kind of looking forward to getting some exposure here and happy to ride the turbulence as they come through. Active investors have got some pretty complex challenges if you're trying to trade it.
Yeah, the passives get to be very passive, very little free float apparently on the SpaceX. So
yes.
You get to be truly passive, don't you?
Well, exactly. And I think that there's a reflexivity here is that the people doing the listing understand these rules, right? And they understand the mechanisms. And, and their job is to have a successful launch, which is just not just a launch, but what happens in the first day, the first week, the first month. We will quote these statistics. So there, it's setting up for a mechanism where, yes, the passives have to buy into quite a small float.
Okay. David, thank you very much for your thoughts. David Stubbs, Chief Investment Strategist at Alpha Core Wealth Advisory. The US and Iran remain at odds over key issues, including tolls in the Strait of Hormuz and the fate of Tehran's enriched uranium. This despite Washington and Tehran suggesting signs of progress. The Secretary of State, Marco Rubio, said there are some good signs that a deal can be reached with Iran, but warned an agreement would be unfeasible if Tehran charges tolls in the Strait of Hormuz.
We've always said a tolling system in the Straits would be unacceptable, but we don't just say that, the world has said that. We have a resolution right now in the United Nations. We're trying to take it to the Security Council. It's sponsored by Bahrain. It has over 100-something, the highest number of co-sponsors in the history of the Security Council have signed on to our resolution. We were in China last week. We mentioned this about the tolling. They're against it. No one in the world is in favor of a tolling system. It can't happen. It would be unacceptable. It would make a diplomatic deal unfeasible if they were to continue to pursue that. So it's a threat to the world if they were to try to do that. And it's completely illegal, by the way.
Still to come on the show, President Trump postpones the signing of a new executive order on AI. We'll explain the details of that for you next. Plus, Estée Lauder ends talks with Puig over a potential merger and shares surge in after-hours trade. We'll take a closer look at why the deal failed. And we'll stick with the luxury sector as Richemont reports earnings. We'll discuss what's next for the sector with Bernstein's Luca Salter. That's coming up at 7:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Pokemon card boom is fueling queues, sellouts and frenzy, no less, at retailers in Britain, the US and beyond, with some buyers treating cards like tradable assets. Arjun joins us now and can explain more about this frenzy. It feels like such a throwback. I mean, it looked like Pokemon was going to go digital, they've got to catch them all the online version. And now it seems like The old school cards are the things that are the most appealing and lucrative.
Nostalgia is a huge part of what's driving a boom in this market right now. Look, and it's important just to go back. Pokemon first hit the scenes in 1996 as a Game Boy game for Nintendo's handheld console. Then, seeing the popularity, the trading cards came out. And initially, you can play a game with them and people trade them amongst friends. And they had this huge explosion of popularity. But that popularity did wane in sort of the 2000s. But then it was around 2016 when Pokemon Go came out. Remember the game where everyone walked around and tried and catch Pokemon? We saw a big interest back into the market. Then the Nintendo Switch came out with some new Pokemon games, and that brought more people into the market. And this year is the 30th anniversary of Pokemon, and so there is even more nostalgia, even more craziness about this market right now. There's queues, high resale prices, shortages as well. And I'll just give you a story. I mean, Smith's is a big toy store here in the UK. I remember for market research and for personal purposes, I lined up about 45 minutes before the store opened. There are already at least 100 people in line for a new restock that day. Now, all of those people, including myself, didn't get any stock. But the stuff was sold out. They probably got through about 50 people. But it shows you the kind of frenzy that's about right now. People are trying to get their product, but demand is so high. And there's two issues in the market. One is scalpers. These are people who are really trying to get as much stock as they can to resell at very high prices. The other one is online stores are dealing with a huge influx of bots buying up a lot of product. But one of the things that's also driving the market is these very high-profile sales of cards. There was recently a Pokemon card sold by Logan Paul, the influencer, for $16 million. And there are other cards.
One card?
One card. He bought it for $5 million, so that's a pretty good return. And there are other cards going for hundreds of thousands of products. And I spoke to one auctioneer who's saying a lot of this being driven by crypto bros. He described them as people who have made money off crypto, now going in to these Pokemon cards and see them as a way of making more money. And they're talking about them on X as things similar to stock, saying, hey, this card's going higher, this card's going lower. And I think this is filtering through the other parts of the market. Regular people think they can buy boxes up and make money off this as well, when you're seeing stuff that's even still being printed being sold for double, triple the next day on sites like eBay, for example. Just to give you an idea of the price rises very quickly, between 2004 and 2020, Pokemon card prices rose 282%. That's according to collectors who track an index. Between 2020 to now, that rise has been 1,350%. It's outperformed some asset classes, and it shows you really how much craziness and frenzy there is in this market, with people thinking maybe, just maybe, they might be able to get the next card that's going to sell for millions of dollars.
Okay, there's so much to talk about, but I think we're going to chat to you more a little later about this. But before you go, I have to ask, if I went into a store, bought one of these packets, I have no idea which are the most valuable. Which is the card, if I get it, I need to make sure I don't sell it too cheaply.
If you even manage to get your hands on a pack of cards right now.
Oh, really? Okay, yeah, go on.
That is the first thing. There's a few cards that are coming out. There's a set called Prismatic Evolutions. There's a card, an Umbreon card that's very popular in there. There's a recent set that just come out called Phantasmal Flames. There's a Charizard card coming out there. You're often seeing these characters that are from some of the original waves of Pokemon still being the most popular and most valuable cards when they come out of a set more recently.
Okay, you have to write the names down for me just in case. Like winning the lottery, isn't it? You open it and you're like, oh, I've hit the jackpot.
Yeah. You don't put these on Vinted, do you?
Don't put it. What some people do.
Oh, okay.
They're everywhere.
Right.
I promise they're everywhere. You can find them everywhere.
Oh, and you've got to catch them all. Arj, thank you very much. We will see you a little later and we'll talk about this a little more. And for more on how the Pokemon card frenzy, if you can't wait for Arj's second appearance, you can find out more about how this frenzy is pushing scalpers to stock up in the hopes of reselling it at a profit. It's all written up there for you online at CNBC.com.
I think Arj is going to battle the scalpers later on. He's going to head out there and take on the scalpers once and for all. Yeah.
See, if you can get hold of a few packets, why not get us one each? And then if we strike one of these gold cards, we'll share the proceeds. There we go. We pledged it on air. There we go. Arj, thank you very much. We'll see you a little later.